Hello and good evening, everyone, here on the live stream on our webinar from Sabio Trade, Mastering Prop Trading from Rules to Results. My name is Frank, and we are talking today about developing a profitable trading plan for prop trading. And I'm very happy that you guys are with us. I'm also switching immediately to the slide sets. I just wanted to use the opportunity to say you personally hello so that you see me in the camera. And yeah, thanking you for joining us tonight and wishing you a great experience, wishing you a great learning. I hope I can give you some nice inputs, some nice impulses as well for your own trading. You're getting today several trading strategy ideas based on sentiment analysis. We're doing a lot of practical work today. Of course, everything gets explained as well in the theoretical way. You see it on the slides, you see it with screenshots, and then we are as well diving into the platform. We are diving into the practical execution. We are not only talking about a trading strategy, we are talking about first to get to the plan, to the through a plan, through the trading strategy, and then last but not least as well, how to test it, how you can do some testing on the strategy to get a confidence about the strategy that it really works. And we're not talking about backtesting, we're also talking about forward testing, and you get a lot of materials as well to see that later on you're getting as well made available in the Sabio Trade course system, which we are currently building up. The course for the system exists already, of course, but the course based on the trading style, how I'm doing it, this is at the moment under development and will be soon available as soon as we are through with all the 5 webinars. So we are having still with today still another 3 appointments together to get as well through this stage. So, but now I don't want to talk too much without showing you something. So let me quickly get into the presentation mode. I keep myself the camera on the left lower corner. If you wish that you can fully concentrate on the content, you can just raise me as well, give me as well a short notification in the chat and say, hey, we would like to see really everything, and I switch the camera as well off. It's not a problem. And I see already we're having here Harald. He tells me Servus Frank, Servus Harald, greetings to you. Hobex is here, hello and welcome as well to you. So please, if you have any point of time during the presentation, during the webinar, you have some questions, some comments, I would wish you to write it. Don't keep your questions back. Only if you ask, you're getting actually as well a little bit smarter because you get your question answered. Okay, let's get started. And today, developing a profitable trading plan for prop trading. And the best is for you today as well is a 20% off code with my name is Frank. So we are showing this later on as well, but if you go to sabiotrade.com, select yourself the plan, and you are saying, okay, I have a promotion code, enter there my name, then you get 25% off the original price. So you get a rebate. And as traders, we are always looking for buying a little bit cheaper, right? So it's a good opportunity. So this is a little bit of a thank you as well from Sabio Trade and from my side as well for your time that you're spending with us tonight. Good. Let's getting quickly again through the agenda. We are doing we have 3 parts of the webinar today. So you should be really trying to stay focused throughout all the 3 sections. It's a lot of material. But if you stay focused, if you take yourself some notes maybe as well, if you rewatch it later on when it's made public on the website, you can maybe take out the best of it. So we are creating an individual trading plan. We are doing the trade setup. We are looking at sentiment and technical. I'm talking a little bit about fundamental analysis as well. In my trading, fundamental analysis is actually always expressed with the sentiment. So I don't have to necessarily dive into the fundamentals by myself too much because many other traders are doing this instead of me. And I'm looking what the other traders are doing and take my decisions based on how they are behaving on the financial market. So a lot of fundamental analysis is already included in the traders as well. and in the traders itself, which is expressed in the sentiment. So we are looking very much about the sentiment today. And of course, what you can always use for making your setups better is the technical analysis, right? If you're good in trend identification, if you're good with indicators, if you're good with Fibonacci harmonic patterns, rectangles, support, resistance, all these kind of things is always helpful. We are covering some of them, some simple concepts, some successful concepts. The more complex, the more complicated things we are leaving for later, or for really like kind of very much interested traders then at the end to really dive into very complex systems, because my approach is always try to keep it as simple as possible, try to keep it as less time intense as possible, and taking out the best results that I can. So this is why my setup is rather simple and but not minor successful, I would say. In the third part, when we understood the trade setups, the trading strategies, we are doing a little bit of backtesting. I show you how you could do backtesting, a very simple, helpful tool I will introduce to you today as well, where you can document your backtests, and then of course going to a forward testing out of the, now I forgot the word, which coming later on again. But into a sample which you never have seen before. What means forward testing? Forward testing means at the end trading in the live market or in the live environment, or with a sample, out of sample data set that you don't know. This is actually forward testing. Very important is stay until the end of this end of the session for the special bonuses and offer. I will also tell them you very much at the end. So this is definitely very important to stay, because only the whole package gives you the right advantage. Okay, tell me a little bit about yourself, guys. I'm seeing already some people are here. We are having Trace is back. Hey Trace, you were last week already here, so thanks a lot for rejoining. Dominic is here. Hey, servus as well, Dominic. So guys, if you're new to trading, type a 1. If you are already have some experience, type a 2, so that I know a little bit about who everybody is here, how is your knowledge, and if maybe as well at some point of time I have to make it even very basic, it would be great. And then we are also continuing. The best you take out of the session, of course, if you don't have maybe another videos open right now, so turn off the phones or switch them to the side. You don't need to necessarily turn off. For example, I have my phone, I put it in the pocket. I also don't use it now. In the next couple of minutes, and switch to a computer maybe, that you have a better view if you have. If not, a tablet is great. Also the smartphone is great, of course. Write down new ideas and thoughts throughout the session, may be helpful for you. Take some remarks I make that you could think are helpful. Take out some notes where you think, oh, I would maybe have to re-ask him again what was that, so that you don't forget as well what's important for you. Actively participate like Trace is doing, Dominic, as well as Michael is here, or Hopex, Harald. Just be active, asking questions, and take out the best. Okay, then let's get a little bit to myself, who I am. My name is Frank. I have 10 years plus of trading experience. Maybe the number I have to increase a bit, but the real trading for me started actually in 2018, when it got everything like that successful that I could do mainly, or yeah, actually do the trading in a professional way. So everything what I'm doing is with trading, mainly of course as well, like trading by myself as well, giving then here and there some educations and developing some systems, which of course also some traders are having a great help of, because I'm from a studies perspective, I have a business informatics background, so it is actually coming along with the studies as well that I was dealing all my career along with processes, with business processes and automating business processes. And so it's a logical consequence that I'm using the knowledge of process management, process engineering, process development together with system development, also in the world of trading. and trying to combine here the economical part with the technical part, building algorithms, building indicators. And you will also see later on my screen of the Sabio platform, I use a script for a special indication, which of course also will be deployed as well with the course, what I mentioned before, because based on this script, you can trade a really, really nice and excellent strategy, which I will be talking about in a few minutes from now. So that's a little bit about myself. If you have further questions, please type it into the chat. I'm very happy to answer you. And also remember the first name Frank, because it's important, not because I'm named like this, because you get 25% off if you take a plan from Sabio Trade tonight or in the next couple of days. Good. Michael, I think yes. I think the webinar will be also put actually into the YouTube channel. I guess so. I think at least the webinar from last week is out there. So I would say yes. But let me quickly check that if this is true. I will be sure I'm getting the answer very fast here. Just a second. I will check it immediately and then I will give you the answer when it's there. Okay. That's amazing. Yeah, because you should rewatch. So let's start here. I named it now the 21-day trading challenge. Why 21 days? First of all, because it is approximately capturing a month. And you should give yourself a month, definitely, for getting used to something new. And I put this in a frame, and you will see later as one as well. Why? Because after the first 21 days, you should have enough data to get a forecast in which direction your account is developing. And then it's not stopping after 21 days, of course not. No, you continue and do the next 21 days, and you do the next 21 days, and you do the next 21 days, and so on until you are getting up to 100 days complete. And if you have 100 days completed, I tell you that you have a great set of statistics together that is actually helping you to understand how the strategy you are using is working for you. And now think about with me. It might happen, and here we have to be honest, it might happen that the first challenge you do with Sabio Trade, or the first challenge in general you do, it might maybe not immediately result in your getting an account released. It might be there happens something, a trading mistake, a misunderstanding of the strategy, whatever it can lead to. We were talking already about it, right? Or you took too much of a position, whatever. It can happen and you maybe breach this account. But what you don't breach is the statistics that we are taking from the trades. So you could continue with your statistics, with your statistics sample, so that at the end of the day, you are also able to learn from maybe a failure. So don't see it like as a shame or as an embarrassment if you are maybe need 1 or 2 or 3 trials to get to the funded account. Many traders have to do that. I told you the secret already last week actually. I also was running against the wall with the account, right? I also didn't get it on the first trial. It can happen, yeah? So that is actually something I would like to take you not as an embarrassment, I would like to take you as a source of learning. And for this we are giving you, or I'm providing you with a trading plan where you can take notes about your trades, more from a statistical way than from a mental psychological way. Of course, there is also a possibility to put your psychological feelings about it into this plan, but I'm rather focusing a little bit of the numberings. I'm trying in trading always to get as number oriented as possible, because this detaches me a little bit from the emotions. It detaches me as well very much from influencing myself from maybe um, a consciousness that only exists inside myself and the numbers telling me a complete different picture. Maybe my trading strategy or maybe my statistics are not so bad. Maybe this was an outlier which was causing the breach of the account. And this is why it's important, why I'm saying 21-day think in buckets, 21 days, 21 days, 21 days, or make it a 21 trade trading challenge. You can also exchange day with trades, for example. But very important if you start is your motivation and your financials. Financials are pretty simple to fill because you take just the number of the plan from Savio, for example. You have several possibilities to get here, like different account sizes. So the financials are actually not a big deal in prop trading, right? Because you only need to get the account, the fees for the account paid, and you get actually the money in your account making the challenge, and then if you pass it, you get the real account funded. And I got meanwhile already like the answer as well. So yes, definitely true, Michael. We get the webinars on the channel, and also you get made announcement and mailers about the replay of the webinar. So watch out in your mails, like and follow the channel here, and then you will be getting all information. But we were talking about motivation and financials. So the first question, guys, and if you wish, you can answer me in the chat. I mean, this is a personal question, right? And feel free to share with everybody. That would be nice. So why do you want to trade, and what are you trying to achieve with trading? And you know, some people might say, I would like to earn $1 million overnight. And I say, okay, this is a goal, but it seems and sounds a little bit unrealistic. So if you're thinking about your motivation, think about that it is specific. Have a specific goal on it. That could be something like, hey, I would love to trade because I would like to pay my rent every month by trading. Or I would like to do trading to earn me additional money to make 3 additional holidays a year. Something like that. Make it as well measurable so that you at the end of the day when you are working on your goal, that you can look back and say, oh, you know what? I can say my goal is completed if I was 3 times on the Balearic Islands. I wanted to be on Mallorca, on Ibiza, and Menorca, for example. That could be very measurable. And all of that should be paid by trading. The cost of it is X amount. Let's say you need for every travel in average $1,500. So it would be $4,500. So you're very specific. It will be measurable. And you should also be aware of if it's realistic, right? So if it's realistic. So think about as well, when you talk about realistic goals, which account size do you really need to get this money earned? Because when you think about you want to earn in 3 months or in 4 months like $4,500 that you want to get paid out, you have to keep in mind that we have in all of the accounts the drawdown limits of 5% a day and a 6% trailing drawdown limit. That means if you are like having a goal that is not fitting to the account size in terms of risk and money management, the goal would not be realistic anymore. For this, you would know, okay, how much percent in a month I'm able to make at the end with these boundaries what I'm having. And when you are talking about you're getting like 3% a month completed, a $20,000 account could be maybe a little bit too small to reach the money at the end to do that. Maybe you need a 100,000 euro account for getting there. So everything is scalable, right? So do it exactly in that way. And of course, to realistic, belongs as well in which time frame you would like to achieve that. If you say, I would like to achieve that in the next months with prop trading, I think the time frame is not realistic, because you need to make the challenge, then you need to get, and then you need to succeed the challenge, and then you need as well to deliver your performance immediately. So think about these parameters, and this is something what should drive you out of your comfort zone, making you sitting on the platform and giving your best in trading correctly. Trading correctly. That's the thing. So after you have specified your goal, you are thinking about, okay, which market I want to trade. I filled it now, pre-filled it here now, for example, with the Nasdaq. My motivation costs me per month 750 euros. Let's say this is the rent you have to pay. How much capital I'm able to have at risk? I mean, here is the account size of the Savior trade, is like 20,000, for example. How much risk I want to use each trade? 0.5%. I have to keep in mind the drawdown limit. So I would like to at least that I can, you remember the statistics from last week, right? In a 50-50 hit rate strategy, 10 trades in a row losing is getting already very unlikely. Can happen, but unlikely. So I would like to be still alive when this is going to happen. And then you can see as well here, first calculation in the plan. I show you the plan immediately as well in live, how it looks like, what you will be receiving then. You will be standing after 21 days at 20,840. Okay, so when you think about the Mallorca, Menorca, Ibiza example, you recognize I don't reach this even in 3 months, the 4,500, much too small of an account size for this goal. So you see that you need to go higher, definitely higher. Okay, so thinking about 100,000 would be absolutely fine, because this is 5 times higher, so you would make a little bit more money in 21 days, and you need 3 months, so you need like actually 60 days for reaching the goal, for your personal goal. You would giving yourself, for example, 3 months. After 100 days, if the results are optimal, always with this optional statement, if your results are optimal, then you get there, right? And then after 100 days, 24,000. So you see that this is then, you would need 100 days approximately to reach your goal to get to the Balear Islands. Okay, so far to your personal motivation and financial planning. Any question? Great, love it. I trade because I discovered passion in it, and for financial freedom, all kind of it. Nice. Thanks a lot for sharing, guys. Very, very nice that you share, that you shared your goals here with that. And I hope, I mean, get a little bit more specific when you plan it later on, maybe as a small feedback. Freedom is great. Yeah, so it could be financial freedom, it could be time independence, it could be location independence, whatever kind of it. And even if you are striving for location independence, maybe be a little bit more specific where exactly you want to go, in which country it is, how you want to live. Picture it for yourself. Make it a dream. Make it a dream that drives you out of the bed every morning and makes you a smile into the face when you're just thinking about it. Then you have the right motivation. And then I think you can also withstand some hits at one point of time, because you always have to think about, when you fall, you need motivation to stand up again and try it again. Nobody is perfect, and I think there is people which are getting it on the first trial, but I think the most of the people need more than one trial to get it actually into the funded account. But there's many great examples out there on the YouTube channel as well of traders that got it. Watch it, inspire yourself with the videos, and say, hey, you know what? I'm going there as well. Okay, cool. Let's go to the next site. Here we can go pretty fast over. I would like to just outline here, understand the product you are trading. This is the message of the slide. If you trade a Nasdaq, understand the tick size, understand the stop loss ticks, understand the tick value, understand the value for the contract you are trading, right? Understand how much risk you want to take. This is actually taken over from the plan automatically, right? Average daily pip goal, what you are having, and so on and so on. This is something what you can specify here and you need to understand, right? So because it's essential, you need to understand what you're buying. You need to understand what you are selling. I just want to get it here straight and tell you, okay, look into the details as well in the platform. For example, let us check it out quickly. Here, for example, if you're going into the information box, I'm here on the NASDAQ already. We could also check another pair or another market, no problem. But look, here you have information about the market, but you have as well information about the trading conditions. Look into it. The contract specification, right? There's written how much the volume step, minimum quantity of the what you can trade, the leverage that is used. Also the swap. Take care about it, guys. This is something what you need to take care about. The swap is absolutely there. You get on a yearly base 10% swap when you buy the Nasdaq. So imagining you are close to the knockout border, to the drawdown limit, and you don't regard the swap can push you over the line. It has to be crystal clear. And you also have to be clear that on a weekend you pay a little bit more. So if you want to have positions that you plan over the weekend, calculate your swaps and look that it's not pushing you over the border. This has to be taken into consideration. So this is what I mean with understanding the specification, understanding your product, what you are trading, and that's really like an important point. So let's go further, because now it's coming the real deal here. This is in the challenge that you're going to face. It is the performance tracker. Yeah, so here you see the target in pips. Here you see like the dates when you were trading. Here you're filling in your results in points. It will be then calculated as well what you really earned, and it will accumulate how much money you made. Of course, you see it everything in the trading platform, but a trading platform is not giving you a forecast. Because what happens, and this we see immediately live, as soon as you start trading, you will see here a projection coming up. So as soon as you're entering your results in pips day by day, there will be a third line coming up and will telling you if you are according to the plan. The blue line is the plan that you were planning in the step 1 before. You gave in the risk, you gave in your target, what you want to earn every day. You gave in the position size was calculated, and based on this plan is calculating a prognosis or your plan estimation that if you're trading according plan and the results are according to the plan, you will be having this development in the equity. And the third line which is coming, you can always compare yourself to the plan. Are you overachieving? Are you faster? Are you better? Or are you a little bit underperforming? And it will be a gray line. It will be always fluctuating a little bit around the blue line. And in best is if she approximately hits the same inclination of the line than the blue line. That's the goal. Or being a little bit faster than the blue line. And then you can also see that with this plan, if you think about a 20,000 challenge, you need to reach approximately 22,000, and you can read, I need approximately 52 days with the current settings if I'm according to the plan. Then you know as well 52 days divided by 21. Okay, I need approximately 1 and a little bit more than 2 months, right? 2 months and 10 days. So 2.5 months you would need for getting out of the challenge mode into a funded account if everything goes according plan. If you are faster, well, you achieve it faster. If you are slower, well, then you achieve it slower. If you hit here the 18,000 area, then you breach, right? 10%, 6%, sorry, you need to get here 6%. It's not 10%. 10% is the goal, and 6% is the trailing drawdown limit. Remember trailing drawdown, right? So if you get a new all-time high, your drawdown limit is getting closer. It's always 6% from the account height. That's important to remember. Okay. Any questions so far? No, I don't see any questions at this very moment. Den Tracker wird's zum Download. No, sorry. I read a question in German and immediately I answer in German. Oh my God, no, I shouldn't do that. Harald, yes, the tracker will be available for downloading. Together, you will be receiving this with the course. Okay, so the course at the moment is in preparation. We have still 3 webinars to go. Then in May, the course will be approximately in May. The course will be available. And with the course, we are submitting all the files, the trackers, the plan, everything what you are seeing here in the webinars, you will be getting as well free of charge for using it, for downloading and using it for yourself. Absolutely. Mallorca, yes, German, please. German, you mean I should be speaking German? Or how can I understand that? No. I of course I can speak German, but the webinar series are held in English, so this is why, of course, we are sticking to English. I think definitely later on, Fly Hunter Music in the recording, I'm pretty sure there can be subtitles included. I'm not sure if it's going live. This I'm not really sure about, but later on you could have the German subtitles if this is of help. If YouTube or Google understands my English well enough to translate me into a good German. I'm not sure. I didn't try it. I didn't try it on myself. So, but this webinar series is definitely in English. Okay. Good. Then, last but not least, the statistical control is also part of the trading plan. Here, I need to step a little bit back. If you are trading, for example, on today, on the 15th of April, if you would have traded, let me say, 5 trades, and your overall result in pips would be 50 pips or something like that. This is great if you track it. It's your daily result. But we are interested from a trading statistic perspective in every single trade we're gonna do. So what you can do then, or what I recommend everyone to do, is to make a deep dive into all trades and writing then, according to the day you are trading, all your results in here. So how many points or pips you were receiving for each trade. If you made a loss, it's minus. If you made a plus trade, it's plus. And then you can see here automatically calculating your trader statistics, right? So you can see then for each week, it's accumulated out of this box, and it is calculating your average win, your average loss, your hit rate, your payoff ratio, and your system expectation. The payoff ratio, and here's for example still the information then how it's calculated. The payoff ratio is the average win divided by the average loss, and the system expectation is like the winning probability times multiplied with the average win, you subtract from this product the losing probability multiplied with the average loss. And this is your system expectation for every trade. In this little statistic, very, very, very weak statistic of only like 8 trades, you would have a system expectation of 5960. That means that every trade in the sample, in the statistic sample, is contributing with 59.6 points statistically to it. Okay? It doesn't matter if winner or loser. This is your system expectation. Of course, this number is getting much, much more like solid and much more significant the more trades you do. That should not be a recommendation to make like high frequency trading, which actually in prop trading is anyway not allowed, so that you get statistics fast. No, do your trades exactly according to plan. And with the time, I promise you will reach many, many, many trades. Um, Good. Okay, so let's get further. Okay, Fly Hunter Music understands. It's great. Thanks a lot for the understanding. Appreciate it, of course. And let's go then to this one here. So the promotion code, important information, is valid for the single packages, not for the pro packages, right? So if you are taking here a single package, you can choose your tariff and then you get 25% off for a single package, not the pro package. That's important to say. Um, This slide means now as well we were completing the trading plan. Okay, so that means we are going now to the trading strategy. So now I would wish you to pay real attention. And if you don't have yet a trading account ready, it's time to do so latest after the webinar, I would say, because it's always good to practice immediately after the learning. And yeah, that's it actually. So use the time for preparing yourself, and now we're getting into the trading strategies, probably now the main content of the webinar today, because this is now really the tactical execution. I don't say it's more important than what we talked about before. I would even say what we talked before about the risk management, the planning, being clear about why I want to do something is at least equal important as the trading strategy itself. So let's go and look into the trading strategy. I told you before already, I'm looking for sentiment. For everyone who is not familiar with the sentiment, what is it about? The trading sentiment actually is telling me how traders are positioned. I took here for the example the US 100 or NDX or the Nasdaq, and see here that I have a buying sentiment today of 59%. That means in my data source I could identify that 59% of all traders that are invested in the Nasdaq, they are actually positioned long. That means all of them were buying. Okay, so all of them were thinking about the Nasdaq will be going into the positive direction. But now think about it. What happens when 85% of traders, even more than 85% in some circumstances, are losing money? And you know that 60% are buying. What is maybe the better option to do for the Nasdaq than going with the majority of the traders, which you know that they are losing? Probably is better to sell. And for us, it's very important to understand, first of all, how they are positioned, and then we have to combine it with technical analysis, with a trend analysis, if we are going against the majority. But what it clarifies for us, and this is very important, maybe the most important about it, it clarifies direction. So when we are seeing that majority, let me say 50, 60, 70, 80% are buying or selling, then for me, the direction, or for the trader, the direction is pretty clear that you would like to find trades that are going against the majority of the people, because you know that the majority of the traders are losing money. So we are making usage of this knowledge. And then we are finding a technical setup. And you see as well here, for example, I was marking you here on the picture of the US 100 a buying signal in a downtrend. It was, we can look at it in real as well, of course. We can look at it in real. There was a buying signal in a downtrend from the sentiment. This is daily chart here. You can see it here on the bottom, daily chart, downtrend. But we got a sell-off. The sentiment shown us, okay, this was here in this area. When we're leaving the extreme area, in this area we were leaving here and saying, okay, now we are going and leaving. So we're getting now less and less buyers. That means the selling is getting lower and we are preparing for buying. So if you buy here, you make a pretty good deal, right? Because this is a daily chart. It's a pretty good, solid setup to the upside. Then again, we are getting here a break of the zero line. So from many sellers, which supported us in getting the long signal here, the long trade, we are switching again. Suddenly the sides. It's a little bit like rope pulling against each other. Buyers and sellers, they're fighting, they're battling. And now suddenly the buyers are getting again and winning this fight, which is meaning for us, okay, I'm turning to the short side. So here you see as well that we are having a red signal. We are matching this immediately live with the dates. I will show you the statistics of the sentiment and the chart, and I will show you the signals what I have here already imaged, because we cannot recognize the dates here and we cannot recognize it on a screenshot, but I would like to just show it to you right now. So we had here crossing the zero line, a short signal, and you would probably like bear with me to say this was a great signal, right? Unfortunately, we were leaving the extreme again. This could have been triggered a long signal, so they could have triggered us to say, okay, we have to be careful right now. This was a false signal. I also would like to show you that there is also false signals. And then again, we have again leaving the extreme here in this area. It was on, I think it was on the 8th of April, I can remember this, which triggers another long signal after a drop, which makes a correction probable. And then you could go again and buy this market and again making some good money. So meaning we have out of these four signals, by just reading the buyers and sellers, how they are positioned, we have three really great trade opportunities and one for the statistics which didn't work really very well, which was a loser obviously. And if we are keeping it with 0.5% risk, nothing happens. We lose 0.5% and we are at least winning 0.5% on all the other three. And if we are managing it really, really great, we are even able to make more than 0.5% on each trade, so that at the end, our balance should be positive. Okay, so before we're going to the next slide, as promised, let me show you this on the platform. So I promised to go with you to the daily chart. Let's go to the daily chart. First of all, let's taking here the time frame of 30 days and squeezing it a little bit lower. And then I will bring you up the statistic tool. And actually also this matrix which I'm showing you now, you will get access to, so that you can analyze yourself as a trader of Sabio. At the end, you can take this tool for analyzing the sentiment on your own. But now I have to check. I extra prepared it before. Let me check where it is. Here it is. Okay, so this is the sentiment matrix that we are seeing here. Let me go here to the history, bring it in presentation mode, and you see there's many markets in 26 markets I'm analyzing every day and providing the data to the traders. And you do not only find the US 100, you find the DAX, you find oil, you find gold, you find plenty of currencies inside as well, so that you have here, and I took only markets that are attractive for traders because I need a good database, right? So here you see exactly the same picture. So I screenshotted it out from this tool, and you see here what I said. We were leaving the extreme area here at around the 17th of March. This was the first buy signal I got, because we were here very extremely positioned buying and we were leaving the extreme situation. And this is the 17th of March. So that means if we are going now into the platform and marking ourselves with a vertical line, the 17th of March, then you will see that we are at around exactly the situation what I shown you on the slide. Here we had a long signal. So then when we go back and looking for the sell signal, which we got here on the 27th, right? We're dropping below the zero line. This was strengthening our long signal, but market wanted to do different. You see here a higher high, a higher low, and then we were crossing the zero line on the 27th in the morning. Data are already always prepared between 8:30 and 9 a.m. in the morning. So you see here, absolutely amazing signal crossing the zero line extensively. So we really dropped here quite a bit. So something had to happen here. And this is now the point when I'm talking often, I don't need fundamental analysis because the trader will show me immediately. If there is a huge move from one side to another, I even don't need to look into the calendar. I say there was a fundamental event probably. It could have been an NFP, it could have been a central bank meeting, it could have been the CPI reporting, it could have been Trump saying something, it could have been many things, honestly. But I don't, if I'm not, and then I can look, okay, what happened? But before, anyway, we never know exactly before the incident happened, but the data immediately show me, and here they showed me, okay, look for a short again on the 27th. So let's look for the short again on the 27th. Let's take the line a little bit further on the 27th, and you see here in the morning at the top, you see here on the 26th, there happened something. We would have to look now into the calendar. Not sure if we can look here into the calendar in the past. Not sure if there was maybe some announcement, something. Definitely this day was pretty bearish. And then you see the drop. And if you're managing it here to stay in the trade, not moving the stop loss too fast, this spike is dangerous. This spike, if you move the stop loss too fast, will kick out a trade. But if you're not too greedy, not moving too fast, is everything hypothetical? I know, but it's like that, you know. If you would, then you would, right? What I want to say by this is, of course, if you move here fast, you know, you go with 0.5%, you get here already a much better value than 2 to 1, honestly speaking. So I would say, you know what, absolutely fine if you are taking the trade off earlier. Anyway, you got a long signal here again. You remember the wrong signal that we got, and you maybe get here into your losing trade anyway. And then you will be very frustrated and emotional when you see this huge drop coming. Why you took the trade out so early? Why you moved the stop loss? That's the game of trading. These emotions is for everybody available, and I'm honest on that one. I'm very emotional too on trading. Even I'm doing it since years. Even I'm doing it as my profession. This is an emotional game, and I get never rid of them. I try to control or eliminate as much as possible to get them as low as possible. The amplitudes of the emotions, of course, but to trade without emotions, impossible. Impossible. I think nobody is able to trade without emotions, in my opinion. Okay. Mikhail, what is exactly not showing right now? Is it at this very moment? I see the connection seems to be great. Now it's okay. Perfect. Okay, good. Well, then let me show you still the false long signal that we got here. This was here on the 2nd of April immediately. We got the long signal here. That was a bad signal. We were failing on that one. 2nd of April, let me bring it here. You got another long signal, another short signal by crossing again into the extreme. So you could catch still a little bit of it. And then you got still on the 8th of April another long signal again. And this was again a fantastic signal in the morning. Remember, you are getting very close here in, and you have a really fantastic trade already running as well, and so on. Which indicator you are using for C, the sell and the buy zone? This is a calculation, Aaron. This is a calculation based on a threshold I found to be valid for good signals when the sentiment shifts. This is just like a threshold. I put it at 70%. So if one buyer and seller group is at, if the buyer or seller group are at 70% of share, meaning 70% buyers or 70% sellers in the market, this is for me the threshold when I say this is an extreme situation, and when we are crossing below or above, this could trigger a good movement in the one or the other direction, depending on which side you're analyzing, of course. This indicator was produced by myself. This is a development I did because I was earlier, when I was trading, I was always, first of all, I was hearing also that most traders are losing. Okay, I hear a lot. Nobody could ever prove me so much. I got an insights into statistics that it's really the case. And by that I decided to trade with the sentiment, and it was a great decision, honestly, because it first of all gives you very, very early signs that the statistic also doesn't go on close to 100%. I'm honest with you. The statistic, when you trade sentiment, goes at around 50, 60, 70%. Some months are really excellent. You make 70, 75% hit rate. Some months are a little bit frustrating. You make only 50%. Maybe sometimes even you make only 45%. It can happen. It can happen. You know, it's like depending how many markets you are trading, how the markets are in line with the sentiment and so on. It's a great analyzing method because it's simple. It's simple to understand the reason to do it, and you can combine it with many technical parameters. Okay, that's very, very good part of it. Okay, so let's go a step further on the presentation and looking at different kind of strategies we can use. So we could, for example, this is only 3 ideas. The simple entry strategy, let me start from the right corner. The simple entry is how the name is saying, right? It's like waiting for the sentiment setup and you just trade. Okay, so you wait for, like in the matrix I was showing you a minute ago, you wait for it breaks here down on the second, goes out of the extreme, you go long. Okay, you see a few days later, damn, it doesn't really work. So you try again the short, the long, and so on, right? So you see here a breakage of the 0 line and you go short when it goes here above, right? How exactly is it? Is really just like this, 8:30 in the morning, very early at Central European time, I'm talking. I see the data, I see the signal, I place the trade. That's the simple entry. And that requires just one thing: coming every day at 9 a.m. to the desk and executing the signals you get. Okay, so look in here. 17 March, 8:30, I get a long signal, I trade it long. Independent of anything else. And this statistics, or the statistics showing me that this is actually working. In total, with a hit rate of last 268 trades, was the hit rate around 58% with a realized risk reward of 1.4. Absolute profitable strategy. You just have to be careful that you stay in the boundaries of what the prop trading firm is giving you, save your trade in that case, right? So this is the deal. This is the simple entry strategy. Very simple. So we covered that. Exit, you do according to the market structure, right? You see here the spikes. Place yourself above or below the spikes. If you go here, for example, long, you put your stop loss below the spikes and you calculate the position size according to 0.5%. Exit as much as you can take, at least 1-on-1. As much as you can take, but at least you take 1-to-1. And I recommend, no, I cannot recommend. I'm doing it like this, that I'm trying to not move the stop loss. I'm trying not to move the stop loss. I say I'm trying. I'm sometimes doing as well. It depends a little bit on the market situation. You could get in a rule and say, okay, when it's 1-on-1, move break even if you want to run it further. But of course, if you then get closer to the market again, probability that you get hit is getting higher. It's just an idea how I'm trying to do it in most of the times when I'm trading the sentiment system. Okay, this is sample entry and is my most favorite one because it takes the least time, effort to be on a screen. Okay, let's go to the next strategy. Counter trendline break. This is something that is subjective because you need to trade actually. You need to know how to draw trend lines. But for someone who is able to draw trend lines, also not that big of a topic. If you want to say you trade according to the sentiment, the only thing is you check in the day, okay, if the traders are more buyers, you sell. If there's more sellers, you buy. If you buy, you search for a downtrend line. Okay, so if you want to buy today in this market, let's maybe go on an intraday chart. This is very good for 15-minute, 5-minute time frame trading. So if someone really wants to do a smaller time frame trading, is a great opportunity, but you need to bring the time with yourself. So let's say you want to trade today long. Was difficult for long actually today in the, or not really. So here you see, for example, a counter trend line. A counter trend line would be looking like this. If it's gonna breaking, then you go and buy. Always with the sentiment. Today we had a negative sentiment, so meaning we have many buyers in the market. So what we would have done is we would have looked for short opportunities. So how are you going to trade the short opportunity? Well, you're looking for a counter trend line in, you look for an uptrend line. So you could have traded here, for example, the short situation. And this is what I mean with the positive about sentiment is you have always a direction. You look into the market and you have direction, right? And then you just identify a downtrend line for an up trade or an uptrend line for a short trade, waiting for it is broken. If it's gonna if it's broken, you trade it. That's all. That's actually all. Not more. The difficulty is to trade the trend line, to draw the trend line. How do I draw the trend line? I'm looking always for two swings. I'm looking for a candle that is a lower high, lower low candle, lower low, lower high candle, two following, and then comes a higher low, higher high candle. A swing is one swing. And then I'm waiting for a second swing. And if this swing is higher than the previous swing, then I'm having two valid points for drawing a trend line into the up direction. That's the strategy idea number 2 that you can use. And this is amazing because you can put your stop loss tight because you don't want to see anymore the market breaking above the trend line. So what does it mean? You can, to avoid spikes, you can go above the swing, or you can position yourself even above the trend line, but be careful of the spikes. It can sometimes retest and then you have a problem, right? So recommendation or idea is to put actually the to put the stop loss above the swing high. for a short trade, but you see as well by yourself what kind of a risk reward you could have achieved with this simple trade today. Because in the morning you see, okay, I'm going short today. So that means I'm looking for an uptrend line. If the uptrend line is broken, I go and trade it to the short direction and have my stop loss above the swing high and my take profit in a multiple, at least 1-on-1, 1.1-to-1 trade. Other better 2-to-1 or even more if you can achieve that. That is another option. This is a day trading strategy. Still 2 strategies to go. Another strategy we are looking at is the crossing strategy I was last week already talking about. So we are talking about the EMA 2050 cross strategy. You're waiting for the cross in sentiment direction, and then you trade the first touch back on to the EMA 20/50 in this area in between. You trade the first touch into the sentiment direction. So how does it look like in a chart? Let's maybe take another NDX open. We have it already, so let's take maybe quickly the US 30 is the Indo, I think exactly. So then we are putting here in actually the indication. Let's take the script quickly off and put in the trend, moving averages, the 20, and as well we are doing the 50 moving average. Moving average, the 50, making, oops, not 520, that's a little bit much. And making a different color that we can recognize. Okay, and then you see today, for example, on the 5-minute base, you had, if you want to trade it short, already after lunch, you had an opportunity here. Is a sideward market, is a little bit difficult, but you see here as well, it could have been worked. So if you trade a sentiment, again, to the downside, you trade it here, dropping, crossing, touching back, and then you have your trade to the short direction. And another possibility now here in the evening when the market drops again. That's the strategy that we are having. And then comes still a special strategy, last but not least, for the so-called scalpers. Let me say that way. It's of course not a real scalping. It's on 15 minutes. But it's really short-term trading as well. So what you are doing here is you are selling the highs and you are buying the lows in sentiment direction. So you are identifying as well with support and resistance. Here when you want to trade actually short, you just look for resistance areas, and then you are, for example, this is now here the moving average calculated on the high prices and the moving average calculated on the low prices. So you're always selling when the price is moving to the upper moving average band, and then you are again closing the position when it touches the opposite direction. So you're just going in when it touches here the upper moving average. You close again when it touches the lower moving average. You sell, you buy, you sell, you buy, you sell, you buy. And of course this works best at support and resistances, and if you are in a downtrend situation. Downtrend situation starts when we are kicking out a higher low, making a lower low, retracing back to the moving average, and then closing again when we are dropping back to the moving average. This is a strategy that has an incredible good hit rate. And it requires concentration. It requires sitting in front of the chart. This strategy also works on 5 minutes, but it works a little bit more relaxed on 15 minutes. More relaxed means also that you need to spend more time, because you get only one candle in 15 minutes and you have to observe them. But this is a very, very good hit rate strategy and very interesting to trade for some people who want to do that. Okay, perfect. So what we're gonna do next is asking if you have some question to the strategy. So please tell me if you have some questions, because it is time to look for the trend example here. Yeah, so this is, for example, I just screenshot. You see here, we're kicking out a higher low. So we are trying to get here, selling it and buying it. And you see, even this is another good result. The market comes back and you don't lose a lot usually, especially when the market doesn't expect some news volatility. Then you have really usually a very, very good opportunity to make your nice money. So we're kicking out a lower high. We're turning to long, trading here, buying, selling, buying, selling. We again turn to short. I sell and buy. You see, it's a little bit a bigger loser, right? But you could also, after this candle, get out of the trade, for example. But you're still selling. We didn't kick out any lower high, so we stay short. We sell, we buy, we sell, we buy, we sell, we buy. Then we are going again long. We sell, we lose. In this moment, okay, we sell, we buy, we double, and we turn the position and sell. Buy, sell, buy, sell, buy, sell, buy, sell. And you see, this has an incredible good hit rate. There is losing trades, no questions, but you have the chance to make a series of very good trades. You can take a very tight stop loss, and you can, or even, when you're observing, you can even trade without a stop loss. But be careful, you have to have always an emergency exit because of the boundaries. Never take the position size big. Always have an imaginary stop loss for the position size calculation. Always important. And then you have to get out. So you have to trade with a stop loss. Absolutely. Sometimes mentally and clicking out if the level is reached, or you have it hard in the system. Recommendation, hard in the system. Absolutely. The sentiment trading matrix is my own data collection. This is my own data collection and will be made public for you guys in the course. Okay, so let's talk a little bit. Once more, the reminder, all single plans, 25% off, code Frank, and this is bringing you up in training and training and training the strategies. And with a little bit of luck in a good market condition, plus your motivation, plus your discipline, you have a chance as well to get an account funded, and it's pretty fast even. You can remember the plan before, it doesn't take even too long time. With a little bit of luck, you have as well the chance to get it done very fast. Strategy ideas we delivered today to you. Your job is now to get into a plan, actually. Okay, backtesting. Let's talk quickly still about backtesting. We are already over time a bit, but let's use it. Another tool you get from me delivered is another Excel file. You are doing here, going in the system, for example, with the trades that we have been seeing, with the system that we have been seeing right now. You put in here the date when you traded, you put a point result, and then you get here calculated immediately all the statistics as well. And you see a graph of the development of your equity, right? So this is also something what you get delivered. So let me quickly show you how this works. This is something I make free for you guys too. So you get here and say, okay, 15th of April 2025, I saw 12 points in the DAX. Then the next trade, we had today 5 trades, for example. This was then -8. So then we made 25. So let me copy this quickly here down a bit to save some time. I just want to show you how this is gonna working. So then we have here maybe 14 minus 5, 17, and so on. And you see that here immediately the graph is working. This is the overall backtest result. Here you can say, I would like to test one time in February, I would like to test in December, I would like to test in the summer months, the strategy, does it work the same? So you can put yourself at different spots. You could say, okay, I would like to test when COVID started. I would like to test when a war started, whatever, to see how the system is reacting and so on. So this is why you can have your different kind of rounds. You see immediately the graph is running, you see the statistic is going, you see your risk reward is calculated, hit rate is calculated, and you see the average winning size, average losing size, and so on. So pretty straightforward. It requires just your willingness to execute the backtesting, and that's actually very simply done. You just need to do a little bit of chart work and you get a feeling about all the strategies I was introducing you today. So it's not like this that I just tell you something. No, I tell you as well, test it. Test it, test it, test it. Not blindly taking it over. No, test it for yourself. Test the time frames you want to trade. Test the strategies you want to trade. See how much drawdowns you get, and so on and so on. Very important. And then you decide what you're gonna do. Nothing should be random. You should plan. You should make your plan. You should learn the strategy. You should do the back test. And you should maybe do as well the forward test. And this is what you can do then already on the account. But you need to understand first exactly approximately what you can expect from the strategies. A back test is immer a little bit subjective. We see usually the trades we want to see. We tend to not see the trades we don't want to see. This is why we have a deviation usually of the backtest results and the real trading results. But this is the game. Try to be as accurate as possible in the backtest, and you will get as close as possible in the live forward test and in the live trading later on. Okay, that's very important. Okay, so this is shown as well. So then we're coming already to the last slide of today. Forward testing. Forward testing, there's a lot of words. Read it through. Important is to understand that we are here having out of sample data. That means we are having in sample data when we are back testing. This is data we know and so on. And then we have out of sample data. This is data which we really do not know. Okay, this is simulating the real world trading, and a challenge is simulating the real world trading. So you can use the challenge for doing a forward testing based on your back test results. Validate how close you get to the back test results. Keep the boundaries. Fill out the plan before. Set your risk correctly. Calculate your position size correctly. Okay? And it is very important to do so because you are by this, reducing overfitting. Meaning exactly what I said before, you only do the trades you want to see and you want to sell and whatever, and so on. If you have a forward testing and it's successful, you have a funded account at the end, right? This is what I'm talking about. If your backtest proves you get a funded account, and you are doing this in the forward testing, in the challenge, and you are kind of replicating close enough the backtest results, the consequence is a funded account and earning money from the next month or from the next week already. You get confidence when you do the forward testing, because doing backtesting is paperwork, right? But forward testing is real trading at the end. And to do that, do all the things what we did today. Define a clear strategy, have your trading plan, split the data in. This you don't need to do now artificially, because when you do the in sample, the back testing means you do it from the past. If you do live forward testing, you do it in a challenge. Test on out of sample data, test on out of sample data, test in the real market environment of data you don't know. Analyze your results. Are you getting close enough? If not, hey, look what you did different in the back test compared to the live forward test. Refine it, do it again, or you have to say, okay, this is such a mess that was created, I try another strategy because I cannot go along with it. Out of sample data must be truly unseen. Live market is always unseen. This is why I'm recommending always doing the testing in a live environment, especially when money that it doesn't hurt so much, but having a little bit of a real money. So meaning if you do that, maybe start with a not with immediately with the biggest account you can get, maybe some that fits your needs. And then forward testing is very important, is also not a guarantee of future success. But if you did the forward testing successful, you have already success because you get the account funded, as said. If the strategy meets the requirements, of course, right? Continuous monitoring and refinement are always crucial. Very important. Having that said, thank you so much, everyone who was participating actively, like Trace again, Aaron was here, Harald was interacting, Fly Hunter, Dominic was here, then HopX was here as well. Hey guys, that's fun. That makes fun. Thanks a lot for your interaction. It's really great to get your comments, to interact here as well. Do you have any questions now? If not, it seems not, then let me tell you again, thank you so much. Wishing you a wonderful evening or a wonderful night. And we have an appointment again in 2 days from now when we are talking in our next webinar. The next webinar's content will be, we are talking about detailed risk management and capital preservation in prop trading. This is what we are talking on the 17th of April, same place, same time. And until then, I wish you a good night. Thank you for participation, and till Thursday, ciao, bye bye.